Hello, I'm Yutaka Watanabe, a tax accountant. Welcome to the channel. Tax Accountant Nabe solves your money problems. Today, I'd like to talk about what are the key cautions under the US-Japan Tax Treaty. Our topic today is how to properly receive the benefits relating to cross-border income, and to break down the concrete requirements needed to do so. What we are using as the basis today is a very short excerpt from a certain source material, just a single paragraph, but an incredibly important one. It may be only a few sentences long, but it is packed with essential points you absolutely need to know regarding international tax procedures. It may look a little complicated at first, but let's work through it carefully together, one point at a time. Let's begin with the core question. What are the key cautions under the US-Japan Tax Treaty? Why is this worth discussing? Because if you receive foreign source income without understanding these rules, you may be losing money without even realizing it. You may actually be paying taxes you do not have to pay. That is a serious trap. So, today, let's organize the necessary knowledge so you can avoid unnecessary tax costs. When we unpack today's material, there are actually three critical steps hidden inside it. 1. What benefits are available? 2. Who qualifies? 3. What specifically must be done? These are the three pillars. Before we get into complicated procedures, let's start with step 1. What are the benefits? The biggest advantage is simple. Tax exemption or reduced tax rates may apply. In other words, the tax withheld in the country where income arises may be significantly reduced or, in some cases, eliminated altogether. That can have a major impact. Income that might otherwise be taxed twice can be protected, allowing you to keep more of your earnings. This is one of those powerful rules that really rewards those who know how to use it. What types of income can benefit? Primarily, these three: dividends, interest, royalties. For example, if you receive dividends from US stocks, interest from overseas lending, or royalties from patents or copyrights, this may apply directly to you. Now you may be thinking, that sounds great. Why wouldn't everyone claim it? Well, here comes step 2. There is an important hurdle. Even if benefits exist, not everyone gets them automatically. This is where the limitation on benefits clause, or LOB, comes in. It may sound technical, but it essentially asks, do you legitimately qualify for these treaty benefits. It is a strict anti-abuse test designed to prevent unrelated third parties from misusing treaties previous simply to avoid tax. Where you can pass, this test determines whether you can receive the benefit. Now, suppose you do meet the LOB requirements. What comes next? That brings us to step 3, taking action. And this is where many people stumble. Here is the biggest trap I want you to remember today. Some people assume there's already a treaty between Japan and the US, so the tax deduction happens automatically, right? Wrong. It is not automatic. You must take action in advance. Specifically, you must submit a document called the notification form relating to tax treaty to the tax office. Simply saying verbally, "Please apply the treaty," will not work. Unless this prescribed document is properly prepared and filed in advance, you may not receive a single yen of treaty benefits. So let's summarize the action plan clearly. Step 1. Confirm whether you satisfy the LOB requirements. Step 2. Prepare the notification form relating to tax treaty. Step 3. Submit it to the tax office before claiming treaty benefits. That 1, 2, 3 sequence is critical. Follow it and your profits are better protected. Finally, let me leave you with one important question. If these treaty benefits are not automatic, is it possible that the overseas income you are receiving right now is being overtaxed simply because you have not filed the proper paperwork? Please use today's explanation to proactively and securely protect your income. I hope this discussion encourages concrete action. Today, we talked about what are the key cautions under the US-Japan tax treaty. For more on international taxation, please also visit the website of Yutaka Watanabe, Tax Accountant Office. I'll continue sharing rights on the theme of money, so please subscribe to Tax Accountant Nabe Solves Your Money Problems channel.